And it's January 8th today. January 8th, and it's Nick's forecast. And here in the middle, nice and cold this morning. Anyways, it's just cold. It's going to warm up later on, which will be great. And where I'm from, Seattle, Northwest, I got hit by some snow this area, a lot of rain. Snow here. We got some snow the other day and some ice. Cool. Anyways, I do more broadcasts. More people are listening because I'm just going to keep knocking them out. And today I want to talk about proof of funds, specialty funding, and more stuff. Proof of funds that we do. It's a business that I've got. Proof of funds. This is for the real G's, the real investors. Proof of funds is awesome. Another way you can work around down payments for deals. Essentially, what it is funds basically your money, usually with a big bank or basically some type of hedge fund that leaves you fund it. You owe the money, but you're not using the money. And so it's a great real estate deal for investors, or if you're building a big project. It's an awesome deal if you're building a building, or you may be building a shopping mall, or you may be financing a casino, or maybe an oil and gas rig structure like we've done before in Texas. This is a great way to go. Now, we're pretty specific in what I do. We do $1 million to $50 million. Ton of specifics we do because we've been doing it long. We have a ton of specific stuff that we do, and there's not that many proof of funds people can have correct sequencing of bank numbers. It's a great way to go. There's a lady in Detroit a while back. She was pretty scored away. She had a big special on about 9 months ago. The problem is, and can't do that. And she was pretty scored away. She was making millions of dollars every year because there weren't that many people doing it. On Craigslist, you don't see it much anymore, but it will start coming back as the economy is ready to pop the bubble here at any time. Numbers come out, job numbers sinking, all this other stuff sinking, blah, 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 blah. It's just part of the cyclic nature of the economies. Anyways, so proof of funds is great, especially doing real estate deals. It's a great thing. Now, we don't do small 5 million. There are some people that will do it, but we don't touch that stuff. This is for an accredited investor. If you're a new investor and you want to use it, great tool to use, because you're going to have to put money up. Don't get me wrong, but I'd rather put up and put up that 25 or 30, 35% down payment financing. This is another way around that. We've done proof of fund for people in projects, land projects, malls, casino. It's a great way to get around. Proof of funds is essentially what it is. They show the money, but you're not using the money. So it's kind of like doing if you're buying a house, or maybe you're buying a commercial building, in other words, a part of something, and then a kind of a carryback. And so one is that funds you're not paying any interest for one transaction. Now, when you do the proof of fund, there's a whole specific number of steps that you have to follow. One, you're going to have some money up to do it. There's going to be a fee up front. Doesn't matter who you do it with, fee. Like when we start at $5 million, we'll have a non-refundable fee. Depending on what we go through, it would be like $500 to $5,000 non-administrative fee. If you don't like it, don't call us. We won't talk to you. And you go on you'll have 24 hours in the account and wire it. This is pretty standard practice. So $500 to $5,000, because you may or may not get the POF, then you shouldn't be in this game doing it. This is the big boy league. So we do 5 million and up. It's a great tool, and then you'll have to pay a certain percentage depending on where you go, depending on what nature of the bank that may be going through. Maybe C's Bank. It'll be a big bank, be a top 50 world bank, or it could be a big hedge fund or advisory group that's doing it. And we have a whole variety of ones we use, and it's pretty on the board. So you'll have to administrative fee. You'll have to pay up front. You may or may not get the proof of funds. We've seen it happen. They lost the fee. It's all in writing. Lawyers wrote it up. If you stress about losing a small amount of money like that, don't call us. There's other people you can go talk to. Also, too, you have to have your basically all your information for your accounting, your banking, your business. Make sure you have your business set up, your LLC or Chapter S Corp, or however you have it, however you have your limited liability corporation set up. Basically, having all your banking information set up, having your ducks in a row as far as the project, what the project's going to be used for. You have to be specific. You're going to have to write up at least one or two about your project or whatever you're using it for. We have people using for trades. Players are using for trades, and this is another way to go because they don't want money out. So this is what's like doing a zero down thing. It's just a different way of doing it. So proof of funds so essentially what it is, you have to have cash in the bank, but you're not going to put up 20% like you're buying a commercial building. If you're going to be generally doing it for a commercial project, usually you're building a mall, a casino, strip mall. You might be building apartment buildings. A lot of people use them for apartment. Might be doing a specific trade for something you're trying to do, whatever. Oil and gas, you may be trying to put something up. We've done those before for oil and gas ventures, or whatever. And so proof of funds really works really well. So basically, you have to, there's going to be administrative non-refundable where you're going to pay. You have to have money out to pay for it. You're going to have a specific synopsis of what you're going to do. Have your LLC or Chapter S Corp, whatever your accountant tells you to do, or your tax attorney or business attorney tells you to do. Have a written, basically specific instructions on the bank that you're going to go to. You're going to have to ask some specific questions, or maybe the particular entity that's going to go ahead and basically provide the money for you to use for your project. They always do it their version of underwriting. And they may ask for some other information, which you got to put up your ID. You're going to have to get a picture of. You're going to have a copy of your business license for sure. Your banking info, everything will be done. It's not credit driven, so it's money driven. Great, it's a way to go. These are for real time investors that are doing stuff. And like I said, it covers a variety of different things. I'm just giving you some examples because we've done it for all kinds of stuff. Especially funding programs. There's a lot of programs out there that are specific for trading for projects, and there's kind of variables on those. And some are speed trade programs exist. There's some other trading platforms do exist. You read about them every day. The problem is a lot of people don't have access to a person that's on Wall Street, has a Series 7 license and has a Series 5. Series 6, 65, that's great. But you need like a Series 5, Series 8, Series 7. There's some other licenses you need, specific types of trading, and it has to be accredited investor, usually with some firm. And I'm not talking a run-of-the-mill type place. You just be a place with a trader. You have to be able to verify the license of that because they'll provide that, and you can provide that because they're going to be part of FINRA anyways. So these are real specific stuff. Specific trading, but this is a whole another type of deal on that one. And something like that, you're gonna have to have at least $1 million liquid or more, generally, and that stuff's you're gonna have to be able to prove that you have the liquid to do it, and you're gonna have to put up a minimum, generally $250,000, but usually $500,000 to $1 million up front, in the cash that you're able to part with, and also too, you're gonna have to be prepared in case something goes wrong, if there's a loss. This is for real investors. This isn't stuff. And I'm just being real generic about it because they vary. And I've seen tons of these programs all over the internet that don't work. And I started seeing this, 15 years ago. I've seen it besides all the real estate mortgages, stuff that I do and stuff. But I've seen this before. And there's a lot of shysters out there that do it. So I've seen highlight film on this. There's a lot of people out there who do a lot of it, but it's kind of gone away. But there are some programs out there that actually do work because I've seen them. So, and that's terrific. Also, too, there's other specifics of bond deals that you can do. And I'm not talking mezzanine financing. That's one angle, but usually that's another level of finance. But excuse me, but there's other types of specialty funding for deals on certain types of bond issues and bond deals that you can do and borrow against, and different ways you can work it. SBLCs, and it's SBLCs is kind of a weird thing because I've seen stated bank like credits are for real, but a lot of them are frauds, especially if they're from African countries. African countries or Eastern Europe, they're generally frauds. And they're just, this is just the way it is. I did see an SBLC actual real run from a giant bank in Israel, and it's one of the top 3 banks in Israel. It's pretty big, and I actually saw an SBLC for a certain amount that was actually real, and it was being used for a specific purpose for funding. So they are out there, but I mean, it's pretty rare. I remember when I saw one, the first one I ever saw was $50 million one a long time ago. That was probably 14 years ago. It was at a big U.S. bank, and it was a company that we were helping them do some stuff, and they actually had a $50 million SBLC that were using for some specific funding purposes for some stuff they were doing. And that was the first one I actually saw. It was a pretty good sized company, for a mid-sized company, and we were helping them do some stuff because we knew some people that knew the CEO and some of the other people. And so there's stuff out there that works for that type of funding. Now, these are real specific and investor driven. And so you'll have your lawyers will be in there too to do it. Be careful, your lawyers are deal killers, so you have to worry that, but it's good to have legal counsel. Have your accountant set up your LLCs and Chapter S corps. I mean, you can do it yourself, but it's, if you want to, or you might already have one that's already established. But this is for real investor stuff. The proof of funds, the specialty funding is real deal. Excuse me. So, and as far as funding goes, there's a lot of funding out there, especially in the non-prime, the subprime markets. There's a lot of funding out there for deals. Like I've got one company right now that'll do a 90% flip and fix, and that's 90% LTV, which is really high. I haven't seen anything gone beyond that right now. That's for commercial or high-end residential. So I've got access to a lot of stuff because I get tons of stuff all the time. And most mortgage brokers don't deal with any of this stuff, especially on that kind of funding. So if you're an investor, there is money for fix and flip on that kind of deal. You can still do that. You contact me, you want to know, or some of these other programs contact me. But I always put a buyer beware for proof of funds and specialty funding kind of stuff is that if you're not a credit investor and you don't have $1 million liquid that's verifiable, we'll check it out. We have our own private investigators that'll check stuff out. So if you're full of it, we had this incident happen to us years ago. We had a private investigator check some stuff out, and this guy had all this fraudulent stuff, even though I had a business, but it was all crap and didn't go through, and they got slammed pretty hard. So we check everything out just to make sure that it's on the go. So a lot of this you got to have liquid. But the cool part, if you're doing real estate and you're buying apartment buildings or or you're buying high-end houses, essentially, there's some pretty cool funding out there away from the stupid conventional funding. And especially if you're buying high-end homes intentionally, which is depending on the investment, if it's like a waterfront or a series, it's kind of like the one house in LA that's going for $295 million. That's what it was. I read yesterday, and it's been for sale for years, and you're 10 years or whatever going to sell. It's going to auction. Now all of a sudden they're magically getting this low ball offers on it because it's going to go way on, and because you got hedge funds and stuff like that are all up on the builder who built it. But anyways, it'll get sold. But it's like living in Walmart. No offense to Walmart. Walmart's kick-ass corporation, but 100,000 square feet. It's like going into a Target or Walmart. No offense to Target or Walmart, but that's kind of what it's like living in. Anyways, you're kind of like warehouse. It's so big. I saw pictures of it. So, and there's funding for deals, but a lot of times people that are going to be billionaires, there's only 4,500 billionaires worldwide. So there's only so many people that can afford them. Saudi Prince wrote an offer on it and some others, according to the agent at the West Side agent, which is down in LA, which is a pretty big, pretty big agency as far as they do a lot of high end stuff. It's kind of like Hilton Highland corporation, they're pretty big. Hilton guy, he does a lot of deals, or the agency with Umansky and Ross, kind of the same thing. They do a lot of high end stuff, but they do some cool stuff too because they got a lot of high end areas where you can put deals together because you have instead of putting all cash down, there's other ways you can finance the deals. So what I'm talking about in the specialty funding is that a lot of it's subprime. So whether you're doing a proof of funds or a specialty funding deal, or you're doing some type of mortgage deal or some type of seller contract, that's great. But if you're financing for, you're doing a commodities deal, which you use proof of funds for, or you're doing some kind of trade deal, something like that, that you can work it. The cool thing is on some of the speed trade deals, and by the way, I'm not a registered Series 7 holder or 5 or 8 or 6. I'm just a normal guy about just normal type of trades and investments. So this is just my opinion. Okay. So anyways, unlike in the trade deal, it's kind of cool because for commodities traders that do commodities deals, or they may do a currency trade speculation or whatever, it's just another way to go. Some of the speed trade deals, when they do them, and you can read about them because you can read about them on Wall Street, they basically they have ways that they can work around doing the deals where you're just putting money up, but you're not putting tons of money in, and you're still working the deal. So, and basically what it is, a lot of the, when you're doing trade deals like that, they're going on speculation. So like on the cryptocurrency. So, they work. Now, there's a lot of these deals, like I said, that are frauds and all kinds of crap, but there are real ones out there because I've seen them. And I've seen people make a lot of money on them, weekly, monthly. They get big dollar amounts put in their bank account. So the stuff's real, works, but just you have to be careful. Like I say, consult your attorney, consult your stockbroker or CFP professional or whatever, your accountant, to talk about it. Anyways, like I said, this is just my opinion. So that's all it is, just an opinion on it. The stuff does work. But the proof of funds is cool because basically you have to show the money, not put anything up. Now, and back I was saying on mortgages, essentially doing the subprime, non-prime, which is a stupid name, non-prime, it's subprime. There's a lot of ways you can work funding on deals, especially when you're doing commercial real estate or even residential. Now, for residential, it's a great investment. You own a bunch of houses. If you're buying like tax auctions, buying it, not that many good deals anymore in certain areas of the United States, but I get a better deal at tax auction, and I can pay way less than I can pay at an auction in cash. And you might bid on 4 or 5 houses. You may only pick up 3, but bam, that's instant cash right off the bat. So you fix them up, you put them, return them into rentals, you're good to go. But also too, if you're buying apartment buildings, and you can get a seller to take a contract or do a seller's note, which is the way to go. It's a good angle to hit because you can go ahead and get the seller and pay them a certain amount of interest. But the thing is, with the low rates out there, you can still work it. Now, when I started a long time in '95, the rates were way 2.5 times higher. Now they were starting, the conventional rates were starting at 7.75%. And a lot of the subprime stuff was starting 9.5%, 10.5%, and that was considered okay. When I was a little kid in the '70s, I remember in the President Carter years, when I was a kid, I remember gas lines and 18, 19, 20% interest rates. I remember my mom bought a house in Seattle. The interest rate was, she had 750 credit or whatever, high credit during that time, and it was still, they had to put down 20% on the house. And the interest rate was still 18%, and that was considered good and low because most of them were running 20, 21%. So I just remember the stuff when I was a kid, and then as the years went down, the rates kept dropping. With Reagan, they went down further and further. But still, right now, if the rate's so artificially low, because if there's so much money in the system, the Feds are going to have to raise it at some point. They're going to have to burn some sales out because there's just too much free cash roaming around because of all the COVID stuff going on. But there's still deals in there if you can still work it even in big cities that have hot markets. Those markets are starting to cool. I mean, right now, like Austin, San Antonio, Salt Lake was number one, pretty hot. Boise's pretty hot, but still, even Spokane is really hot. But Portland, Seattle are starting to cool. Some California's starting to cool. LA went back up, but that's only usually in LA proper, in the city areas and the real high end areas. But LA County is a pretty big place. You go to San Fernando Valley, or you head up north, and you keep, you head towards, Riverside County or St. Louis Obispo County, some of the other areas. There's deals. If you stay away from the waterfront, you go more inland. There's deals out there. I've seen them online. If you're an investor, go to loopnet.com. LoopNet's got a lot of stuff. Grant Cardone talks about it all the time. He's always on LoopNet looking for deals. And LoopNet's pretty cool. I go on there and look. But there's some places where they've got deals on apartment buildings. You might be able to pick up a 10 unit, 15, 20 unit, because apartment buildings start at 5 unit plus. But like I said, the more units you have, the better. But you might be able to pick up one and get a good deal on it. You might even be able to get a seller to take a carry back on it, where you might be able to get away with putting only 10% down instead of putting 25, and the seller takes a carry back for 5 years. That's the goal. The goal is to have the seller take it for 5 years. And basically, you're trying to get a loan that's usually going to be a 25-year loan. Some do 30. Most in commercial loans are 25-year. And you're trying to string it out as long as you can. And the thing is, you're looking at the numbers, and even at 90, 95% occupancy, it still works. And it still works for you. And, you may have the ability to raise the rents $100, $150, $200, $300. And as you go ahead and you work it out, and you're just looking at different angles to make more money. Now, the bigger the apartment complex, of course, you're going to be able to charge for parking and trash services, and there's some other services in there you're going to be able to charge for. But funding-wise, you still are looking for ways where you can get the least amount of cash as possible, if you can. Now, when Grant Cardone talks, he usually puts down usually 25, 30%, which is cool. But I'm just showing you ways around getting around that where you can totally work it. And so there's ways that you can do that with doing a seller taking a note, doing a full service contract, seller contract, but I wouldn't do that. I would still get some of it financed. Which you can get around with 10% down, seller takes 25% contract, and then you get the rest of it funded by a funding institution, and you're good to go. But go to a mortgage broker. Don't go to a bank or credit union. Let me say that again. Do not go to a bank or credit union, because they will not help you. They don't know anything, and they have terrible appraisers. When you're doing commercial deals, you're going to have to pay for the appraisal up front. It's not going to be put in the closing costs. Sometimes you get 1% to 2% for closing costs. Most of the time, you're going to be paying the closing costs on a deal. When you're doing commercial, you have to basically show up or shut up. You got to have money in the bank. All that stuff's not going to fly. In residential, you can get around stuff because you can get the seller to take 3% closing cost. You used to be able to get 6% closing cost, and you could really work it, because that's how I used to do it. I might add 6% to the closing cost because I know what it appraise out, or add 3% the closing cost at 4 or 5% because you know what it appraise out, and you can work it every time. And sellers don't have a problem with it. They may get a little increase on some of the tax or escrow, but it's not very much. Yeah, you're going to get a little bit on it. So what? You get it sold. And that's the whole deal. That means the listing agent did their job. You do your job. Boom. Deal done. When I did a lot of seller carrybacks for residential, and I used to do it, I'd take every week. I would call in certain areas I was looking for carrybacks for tons of buyers that I had. And I might do it for 2 days. And all I do is call. I might pick up 5, 10, 15, 20 places, houses that had carrybacks. I might sell 5 or 10 of them, doing deals, because a lot of the agents that did it were experienced enough. They knew what they were doing, kind of, not really, but they knew enough they were doing. I had some agents where I did a lot of carrybacks. What they call me up, Nick, hey, I got this house I just listed. They'll do a carryback. Or they call me up and say, hey, Nick, I got this house I found out for 4, 5, 6 months. It's not moving, but the seller's got equity to do a carryback. Boom, done. And I would get the house sold for him because I had buyers. I always say listing is king, but I don't think that's full of crap, even though I was a mortgage broker too. But really, whoever controls the buyers is really in charge. In a hot market, it's a little bit different, but most of the time the markets aren't simply hot forever. And whoever has the buyers end up calling the shots. So yeah, they always try to say the listing thing is king, but to me, it's not true. It's a reversal. The buyers are the king. Yeah, in a hot market, it'll do a variable if it's usually in select areas. But I'll give you an example. In Seattle, and right across the water is a place called Bellevue. And Bellevue is, it's one of the top zip codes in the United States. I'll put in the top 30 easy. The United States is a big country. So, as you know, anyways, Bill Gates lives there, Bezos, all the big players. Paul Allen lived in one part of it. Anyways, but even in Bellevue, you've got East Bellevue, you got West Bellevue. Well, West areas is kind of old Bellevue, but there's still deals there, and you can still get sellers to do carrybacks and stuff like that. Now, right now, you can't do that. That long ago, you could actually still find sellers that had a lot of equity on it, and you can still find deals, or you could do a mail program around there and still work it. There's another area in Seattle called Green Lake. There's another area right up from Green Lake, basically where the Seattle Zoo's at. There's this area up there with a lot of old homes in it, and basically this area up in that particular area next to the zoo, there's an area up there, a lot of old homes, but there's a lot of the people up there that have owned homes for 30, 40, 50 years. And I know some private investors that just keep sending mail out there, and they keep clicking houses off, and they're getting them at 60% on the dollar, because they don't have to pay a commission. And some of them also, too, to get to work it, where they'll have a seller do a carryback, and they'll only finance so much. And the carryback, what they'll do is they'll go ahead and get the note, move it on to another property, and intentionally refinance it out because they bought it because it was worth almost two and a half times they pay for it, and they clean out the cash, 90% or 85% loan to value. And then what they'll do is they'll go ahead and wait a couple years. They'll turn around and move the note on another property of equal value, or they'll turn around and put it back in the same property, refinance it again. Boom. So there are a lot of ways you can do it. Note moving is pretty high-speed stuff. Like I tell you, it's a group of funds, special funding, and more stuff. Now I'm talking about more stuff. And basically moving notes, I've taught a little bit before. This is really high-speed stuff. And commercial buildings, as long as you have equal value, same thing on a home, equal value, especially in the high-end homes, you can really work. I've done this before, refinance properties a couple times, and then I'll put the note back on, wait another year, refinance it again at 90% LTV. I'm still renting it out, and I'm still breaking even on it or making money on it. So, and this is a way you can clear it out. So there's a lot of ways you can do it. Commercial, same thing. You can do the same things, but if you own apartment buildings or both, you can still work it. As long as you have basically an addendum inside also on the note itself. You have this on the note yourself. Remember I told you about the notes. Each county in the U.S. is different. You need to make sure you call the escrow, or you have a real estate agent do it, or mortgage broker, because it has to have a special indentation so far. It has to be specifically done for the county. And you have to call a title company, or call your limited practice officer or your LPO at the escrow company. They can send it to you because it has to be specific. But you can still write it in that contract on the note saying you have permission from Mr. or Mrs. X seller to go ahead and move this note to another property of equal value, as long as they get the note paid off in 5 years. Boom, done. So you can totally work it. I got it where I've moved notes on the 2 or 3 different properties, and I'll put it back in the original and refinance it, or I cleaned out the other properties and make cash on them. So I'm telling you, there's a lot of ways you can work because I've already done it. And this is one of these little old school tricks where you can totally work it. Even in the markets now, you can still work it. I don't care if you're in Seattle, Portland, San Francisco, LA, Bakersfield, Fresno, San Diego County, Riverside County, where Riverside County is there, you can work. If you live down in Southern California, you can work that area. You have Napa Valley in Snohomish County, up in there, Napa County. Go further up a couple of counties, going up towards Truckee and some of those areas, you can work it. Even towards Sacramento. I don't care if in Sacramento, a lot of new construction up there, but there's a lot of old school stuff there. And you can get some properties where sellers own for a long time. You can totally work it outside of Sacramento. There's some suburbs out there. So I'm saying to you, East Coast the same way. It doesn't matter where you are in the Northeast. You can still get outside of New York and you can still work it, or, in a lot of, even in Connecticut, Rhode Island, some of these other areas, there's still, all this stuff applies. The thing is, if you're a real estate agent, you should be looking at stuff, because that's a whole nother stream of income you can totally work. Mortgage brokers, same way. If you're hitting FSBOs, you want to finance them, find out. But if you're a real estate agent, you can work it. You're an investor, you used to be this angle. There's a lot of money here to be working in. So investors or real estate, these are angles that you can work. These are side businesses that you can make money on. And a lot of people don't know about it because they just don't do anything about it, because your broker owners or designated brokers don't talk about any of this stuff because they don't know how to. Most mortgage brokers don't know how to do any of this stuff either. I learned this all on my own, a lot of it, but I learned also too from somebody else and another person that used to do this stuff all the time, and I learned to master it. I ended up doing it way better than they did. I knew about how to put zero down stuff together better than they did. I mastered it. And I used to have real estate agents call me up all the time because I used to do their loans too. Yeah, no, I'm just going to repeat that again. Besides being a real estate agent, high-end real estate agent, did a lot of deals, and mortgage brokers did a lot of deals. I still did a lot of mortgages for real estate agents. So did my husband. He did a ton of. Sometimes I'd take over his stuff because he got overloaded like I did, and we had all these systems. But sometimes I'd take his stuff and do it because I had the expertise no one else had to do it. So there's no secrets in real estate. There aren't any, but a lot of this I'm talking about is really high speed because this is how you really do it. I remember a long time ago, I saw this seminar. God, this is 22 years ago, something like that. This seminar where this guy was up there kind of talking about movable notes. But the problem is he was talking for some bigwig seminar, but didn't know what the hell they were doing. I remember one time there used to be this one seminar guy out of Arizona, and basically the mortgage company I was working at when I first started, this guy, I was sitting there on there, and this guy called him up because he knew somebody that knew him. And the owner guy that I was working with at the time, he knew more about the stuff than anybody. He schooled this guy. This guy was a major player in the real estate seminar business. And I went to a seminar, and I was laughing so hard because he didn't know what the hell he was talking about. He didn't know anything about finance. And you can't even real estate seminars if you don't know anything about finance. I saw another guy on the internet the other day in an ad down in Florida, and he was talking about buying homes, no money down, this and that, but he didn't know what he was talking about because he didn't know anything about finance. He didn't know anything about land contracts, seller contracts. He didn't think about notes, and he didn't know anything about doing seller carrybacks. It was kind of a joke. You know what I mean? Now, Grant Cardone talks about it. He knows what the hell he's talking about because he's been there and he's done it. That's why I like him so much. I keep referring to him. I mean, I watch his videos every week because he's got $4.5 billion, over $4 billion in real estate. And it's all apartment buildings. He already knows what he's doing, but he actually understands the principles behind it. And like I said, he's got that cool program with 50,000 to join. It's pretty elite, but you get access to money and a lot of investors and a lot of mortgage people. So now, like I said before, you can contact me because I do proof of funds. I do residential, now high-end residential mortgages, but mostly commercial mortgages. And the only high-end residential stuff I do is non-owner occupies and certain specialty stuff, but it has to be $1 million plus. I won't even talk to you. Commercial mortgages, that's more my alley with the proof of funds. Like I said, the proof of funds, you go $5 million to $50 million. The commercial mortgages, usually $1 million plus, usually $3 million plus. And for the things that we do, there's administrative fee up front. And if you don't pay it, we won't work with you. Just go on my list and I won't talk to you ever again. And I really don't care about it. And I have a specific stack order of stuff that I need. And when I do it, because I'm pretty precise about it, but then I always close a lot of stuff. So, and also do specialty programs for funny programs, but I don't deal with that. My other associates deal with that. So we can help you out. But back to the commercial funding, let's say you want to do a 90% LTV flip, you might find a my owner or something like that and work some kind of deal, and you could do that. Or you might have a house that you can work, and you might have to put down 10% on the flip. But the thing is, we can finance it. You just have to get a contract. Usually you have to have 3 bids. And go out there and fix the house up. Now, I remember HA used to have a program, but I got abused so bad they shut it down. It was kind of lame to begin with anyways. I never used it because there were too many other programs out there that were way better. So as being an investor or, you know, a real estate agent or mortgage broker, these are areas to look at. If you're a buyer or seller too, you're a seller, one of the questions I'm going to ask you right off the bat after I go through my list of questions, one of the first 10 questions I'm going to ask you is how much equity you have in the property might be in the first three. How many equity do you have in the property? And we will only do a seller carryback. I always used to ask that. Usually one of my top 5 questions, but at least the top 10. And I'd go through a whole series of questions. I might ask 30, 40 questions or more before I even sign a piece of paper. And so I go through with it because 1, I know what I'm talking about. 2, I want to find out certain things. 2, I want to find out what your ambitions are, find out what you're doing. When I'm working with a buyer, it's the same thing. If I'm talking to you on the phone, I'm going to ask you a bunch of questions. I'm going to go through just a whole checklist of questions in my head, and I'm going to go boom, 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 boom. And I'm going to ask you these questions. If I have any hesitation and you're going to give me any hesitancy in some of the questions, especially investors for certain things, I'll just hang up the phone. Because that's what you should be doing as a real estate agent or investor. Even if you're a CFP, a lot of CFPs, they won't even talk. If you don't have $1 million to invest, they won't call you back. That's true. And what I mean by CFPs is your certified financial planner / stockbroker, whatever you want to call it. A lot of people do their own thing, which is cool, but some people still use them. But that's just kind of the way it is. And all my disclaimer, always talk to your legal professional, means your lawyer, your real estate attorney if you need to, your business attorney, your tax attorney. Talk to your accountants as you see fit. If you have questions about doing a deal, make sure you talk to your legal counsel to make sure if you have any questions. But what I'm saying to you is that there's all these different ways that you can fund deals. Moving notes is a cool way to do it. As long as you've got multiple properties, it's a good way to work it, especially to get some quick cash out. That's what I used to do it for. And then reattach it on to refinance your property or refinance another property and pay it off. What I used to do is I used to do double refinances. So I'd have a movable note on one property and I want to refinance it because it's gone up. I want to take some more cash out. Then I put it to another property where I had tons of equity. I'd put that note back on intentionally. And then what I would do is I'd refinance one, bam, refinance the other one at the same time. I'd pay off the note, still rock a lot of cash out, and still be able to run it out and still make a profit. And the same thing with the other property. So you can do that sometimes and totally work it. And sometimes it's beneficial for you to do it, just to get the note out of your life so you don't have to worry about it anymore. Also, too, doing the carrybacks is a good way to go. Now, buyer options, when you're doing a lease option on a house, lease options got a lot of, it can be fairly simple, but they can have problems. Now, if you're seller lease options, cool, because you're getting a certain amount of cash up front, and also, too, you're getting a monthly payment, essentially a rental payment for your property, especially if you have somebody that has lots of equity in it, mortgage or no mortgage on there. It's a great way to go because if the buyer violates the contract and they can't refinance it, boom, you get the property back, you can put it back on the market. And so I've had properties where I've had deals like this where I've done stuff on lease options or buyer options, whatever you want to call it. And basically the buyer, because they're usually the ones that buy it, they couldn't get it refinanced. Boom, I get the property back and then just become a renter. And that's it. Or they're a renter anyway. They lost that chance to buy the house. They stay in rent or you just kick them out or they leave. The thing is that there's the problem with the lease options that it's tricky because if it's not written up right, you can get kind of screwed if you're a seller because there's a lot of legal entanglements that they can't refinance. You have to get specific guidelines. Generally, what it is that each multiple may have a lease form. You need to make sure you read it before you even breach the option. Now, if you're taking a listing, I would always ask, besides taking basically a seller, basically a seller carryback, or basically a note, I'd ask them if they're willing to do a lease option. Usually on the lower end type of stuff, it's a good way to go, or what I call the mid levels. A lot of times you can do that. High end stuff, it varies. It just depends. But generally on the lower end, and also too in the mid level, basically anywhere between, like I say, 150 to let's say 600,000, 500,000 somewhere. That's usually a pretty good area. Especially if they have equity in the property. With the lease options, where things can get tricky is one, the contract has to be written up right, and also two, you may have to add stuff to another addendum for that. Also, too, a lot of the multiples when they have the stuff written up by their attorney, so it's not always accurate. Don't be afraid to talk to the attorney if you have questions about it. Sometimes the real estate attorneys that for some buyers that were doing it wrote up a separate addendum and attached to that addendum to make sure it was solidified. Generally, those are usually 2 to 3 years on those. I usually took a 3-year on that one intentionally. And I've had people that defaulted on those and they couldn't pay it. I take it back. Where the problem is, where things get real tricky on lease options, is the default of the buyer. And they try to make up allegations against the seller, because I've gone through this and had lawyers. I had to hammer the buyers before I booted them out. Anyway, so it gets tricky around the refinance if they're trying to get one. The buyer's coming towards the end of it, the time limit, and they haven't got their credit reestablished yet. I've had some where they want to extend it out for, say, another year or 2 years to do it. I'll charge a big upfront fee up front, and I'll keep the rental payment the same. Sometimes I would increase it, but the contract changes, and that's where things can get really hairy. So you have to make sure you know what you're doing. Also, too, you got to make sure the time limits within the purchase and sale agreement, when you write it up, you need to make sure that they're scored away. Now, if depending on the state, some will have lawyers or escrow on those. I would make sure you have it in escrow when you do it. Generally, because you got to make sure on title, they're not going to be on title. They will not be on title because it's a lease option. That's another stupid thing that happens. The only reason I say escrow to do it is so it keeps it on the up and up when you do it, or have your lawyer do it or whatever, because the thing is, you got to make sure it's totally binding. Big things or problems as it comes up, or the time sensitive stuff when it gets towards the end for a refinance. Now, like I said before, it can get murky in that area because it gets said that they're trying to get it, but they're going to try to apply for an extension. And whether you grant that or not, because they don't meet the time limit, that's up to you. That's where the problems get in. That's where the legal crap gets in. So you got to make sure it's ironclad when you do it. A lot of the multiple forms, let me say this again, a lot of the multiple forms, a good real estate attorney can go through those like Swiss cheese. Okay. A lot of the multiple forms that are written up are not for the real estate agents or the buyer or seller's interests. They're for the interests of the company that are attached to the multiple system in your area. And a lot of people don't talk about this, and a good real estate attorney will shred that out like no tomorrow, because I've seen it happen. It's happened to me. Make sure if you do a lease option or you do a seller carryback, make sure the buyer, the seller agency paperwork is in that contract, and it's going to vary by county and state, and depending on how your legal stuff's set up. Make sure you have that one piece of paper in there, because that could save you from life or death as a real estate agent. And so you need to make sure it's in there. Mortgage, we're going to have to worry about it because you're going to have something inserted in your contracts anyways after they go through and do it. But make sure you check it out. Also, too, another thing, what I always do when I did a lease option deal is make sure you have their credit report. You want to see it, and you make that part of the contract. If they don't want to show it, then tell them to go take a hike. But you want to make sure you have a copy of the credit report so you know what's going on. And also, too, don't be afraid. You can put in that contract. You're going to contact them every 6 months or whatever to see how they're progressing on it. Or you just do it on your own just to find out. But you got to make sure that the time sequence is in there. Depending on each multiple is different, how they set up in the contract. You need to take a look at that. So that's a big deal. But see, what happens is on lease option, the cool part is they're renting from you and they don't get on title. So you have to make sure they're not on title. Even if you have escrow, they still won't go on title for anything because it's a lease option. When you're doing a carryback, seller carryback, yes. But when you're doing lease option, no. So in lease option, I've had it before where I'll give you an example. In Tacoma, I had this one house because I own a bunch of houses, rental properties and apartment buildings there. But I had this one house. I did a lease option one time. I've had a couple lease options on this one house. It was kind of a good moneymaker. I got it all remodeled, this and that. And then I had a lease option one didn't work out. Boom. I basically threw the people out, and there you go after it was done because they weren't going to get anything, and I just didn't want it. I didn't know what I wanted to do. But all of a sudden, I had another agent that I know. Remember, you're going to have to pay the agent if they write it up, so you better be ready to fork out the pocketbook. So I'm just letting you know that now. Agents don't work for free. So on the lease option. Real estate agents doing the work and the time, they need to get paid. So I'm big on that. So I've done a lease option on the else. I did it for 2 years. I got my money. I got a big upfront that I got to keep because it's non-refundable, and they couldn't do it. So I took it for another 2 years, and I increased the rent price on it by like $500 or $400, and then I asked for a bigger fee this time, and I got it. And then after a year and a half after that, so 3.5 years in, then they turn around and they refinance the property in their name, and they got it, and they got the property, and I made a bunch of cash on it because the value kept going up and that. And one of my associates, I gave him a good chunk of change out of that. So it was kind of a co-deal kind of deal. So it was pretty cool. So it can work to your benefit sometimes to extend it if you know that they're good renters or whatever and they're doing their thing. It just sometimes it just doesn't always work out. Boot them out afterwards is it's gone. But it's a good way to go. Like that. So the big things you have to look at is basically going to be some of the time contracts. A lot of it has to do with their time as far as when they're going to refinance. To do it, essentially what they're doing is refinance and making sure that the credit's scored away enough to get it. That's going to be up to the real estate agent that did it, unless you did it with them. You may have a lawyer look at it just in case to make sure. Sometimes these are off-market deals, and I've had off-market deals where real estate agents I know, I said, "Hey, Nick, you got that house? Da, da, da. Yeah, okay. I want to do a seller deal on it. Blah 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 blah." Basically, the agent paid $3,000 instead of getting 3%. They got paid $3 or $4,000 to doing it. Boom, no problem. They picked up a check. All they do is write some paperwork up, and it was done. It was off-market deal, maybe $5,000, and the buyer would pay for it. So, or the seller just paid out to them. So it's not a big deal, and it's not bad. The seller picks up the listing agent, the selling agent picks up a check, and everyone gets paid. I get paid, or whatever. So it's just a way to go. So, but I said before on the when you're doing a lease option deal, you got to check the lease, and you got to check the option to make sure that the timetables are set, and it has to be ironclad. You got to add addendums to it. Make sure you do it. If you need to check with your legal counsel, that means your real estate attorney, personal attorney, business attorney, whatever. Check with them if you need help on that. I'm always a big proponent of that. Ask your legal counsel, because I've had lawyers in the past help me out a lot, because I got in some legal stuff with me on my control. Of course, never went to court. It was always settled out. But having good lawyers really helps. And also, too, if you have a real estate agent that's been through some legal stuff, or a mortgage broker has, they're going to know more than everybody else because they've been through it. It's going to make them a better real estate agent, mortgage broker. If someone's got some little dirt in their fingers, so what? Those people are the ones you want to take with. They have gone through the multiple, have some complaints, so what? That means they know more than everybody else because they're high deals. And that's the person you want to work with that does a lot of deals. And that's the way it is. Anybody too spit shine, I always have questions about, especially if they're really high end. They do a lot of deals. I've read some stories about some agents in LA in the last year in 2021, and these were high speed agents. These agents make 10 to 20 million a year in commission. So there's been some there's some really high speed agents down there. And I've seen it in Seattle too. I've read some stories, and I know the one in Seattle, I know the agents, and they're high speed. They do a lot of deals. And the ones in LA or Portland, especially the ones in LA or even the Bay Area, and they've gotten some trouble on some stuff. But you know what? These agents do 200, 300 deals a year or 400 deals a year. They do, and their average price range is $2.5 million or whatever. So if they get into it, so what? That means they know more than everybody else, and they know how to put deals together. And these agents you like to work with because they know what's going on. And I have no problem putting it up front of the legal stuff that I've been through, but it actually just made me a better agent and mortgage loan officer because I know more about what's going on. A lot of the deals that I put together, you couldn't even put that stuff together if you didn't go through some stuff, because nothing's perfect. No deal is perfect ever. I've never seen a perfect deal. I mean, yeah, all cash deals, but even those I've seen problems with that come up. Things you get, the unforeseen things. One day I'm gonna have to talk about that. Or unforeseen things that you can't see in a deal, because all cash deals are supposed to be the most perfect deals. They'll close in 30 days or 2 weeks or a week or whatever, but they still come with problems. I've seen all cash deals where they'll close in 2 weeks or a week, and all of a sudden these problems at closing because the buyer did this, and this, and all this other stuff happens, threw everything out of whack. Or you've had buyers that try to move in early on a deal for a house that they paid all cash. They try moving in early when it's supposed to close 3 weeks. And the seller never had time to get it clean. I mean, I've seen this stuff happen. And it's bad. It can stuff that just blows out. So even on a perfect deal can happen because you have either side doing stupid things. And I've seen sellers have seller's remorse, even though they got cashed out and it was already closed, but they didn't want to move or they didn't want to do this or blah, blah, blah. Done. So I've seen it happen. But back to the financing thing. Proof of funds is awesome. You're an investor. You want to do some real deals. I do the proof of stuff. I have other associates do it. It's going to be $5 million to $50 million. That's our target range. We don't go below it or be above it. This is real specific, and it's real specific territory. There's a whole list of stuff that you're going to have to do, but you can get a hold of me and do it. There's some specialty funding stuff that I have for specialty deals. On the commercial real estate deals, I can fund that stuff all day, or you find your local mortgage broker that does commercial funding in addition to residential funding. There's certain types of special residential funding, but it has to be $1 million or more. Usually non-owner occupied. I generally don't deal with owner-occupied stuff unless it's a real special case, and it's beyond that because I don't do the license stuff anymore because I don't do those residential mortgages anymore. Even though I could get my license in 2 seconds, like my real estate license, but I just choose not to do it because I want to help people out. So, and showing the game of how it works. Remember, there are no secrets in real estate or mortgage financing. That's all a bunch of crap. So, and go to www.nickforecast.com, www.nickforecast.com. Go ahead and reach out to me, and I'll answer your questions. I got people doing it. Go to my Facebook page, Facebook and Nick's Forecast, my Twitter page at Twitter and Nick's Forecast, but I go to my Facebook page. Also, too, you can go to my page, Facebook at cobrafunds.com. Anyways, but I would say go to Nick's Forecast, my website, nicksforecast.com, or my Facebook page at Facebook at Nick's Forecast. If you got any question or whatever, I can answer for you. And I could lead you in the direction, and subscribe to my channel and basically subscribe on the Facebook. And like I said, since I just beginning this a few weeks ago, now I'm getting bigger and bigger and bigger, a lot more views. And now you just have for you guys to subscribe. And as I keep building out, eventually down the road, I'll have other platforms and coaching stuff down the road, because all the stuff I'm talking about, I look at a lot of videos every week of a lot of real estate, quote unquote, gurus, and they don't do anything. Trainers are different because the trainers I talk about, these are top dogs in the game. They've been around a while. But when it comes to a lot of the real estate gurus and I watch them, they don't know what they're talking about. The reason is they don't know anything about finance. Now, Grant Cardone's the exception because he really knows what the hell he's talking about. He's done 40,000 plus videos, and he's been doing it a long time, but he actually knows a lot of different ins and outs of a lot of businesses, because I've owned other businesses, so I know this. And he owns all these different companies, and especially in the real estate game, he knows a lot about it because he understands finance. That gives him a big edge over everybody, because a lot of the other real estate gurus that talk about, they know nothing about finance. Stuff I'm talking to you today is about real high-speed finance stuff. That's a military term, high speed, because that's what it is. This stuff is the elite, kind of like the NBA All-Star stuff. Stuff I talk about today, nobody's talking about because nobody understands it. And I already know this because I could walk circles around them all day long. Like I had this one mortgage guy that works at this big giant company in Dallas. He sends me a lot of emails and a lot of stuff, and he does financing all over the U.S. But the thing about his financing is that everybody puts down 40% on his deals. He doesn't do any high-speed stuff. And the company he works for, he does vanilla stuff. And the stuff I deal in a lot of the super big charcoal gray areas. And I've got some lenders that do that, and these lenders are not going to find on credit, going to find when you put it in Google or this and this and that, you don't know exactly where to go, you won't find them. And that's just kind of this. But they do the no docs, they do the stated deals. This is the subprime stuff, the non-prime. I've got other funders that do cool stuff. And they do it. I mean, there's funders that do vanilla. Most mortgage brokers only do residential, do the conventional, FHA, VA, some light all day, and that's it. They won't do anymore. But when the market turns again, the bend in the road where I got destroyed in 2008, when you lose a few $1 million, like I did in 1 week in 2008, and got totally ruined in legal stuff, I've been around the block. So all this stuff I'm telling you from experience, and I'm not afraid to talk. It happened. And I lost. So I just go all the way back from zero, all the way back up. It's kind of like when I started real estate, I was 25, got out of the military and broke. And so I just had to build everything up from there and busted ass, and I just did it. So I've already been around the block a few times. I've been a multimillionaire a few times and lost it and got it back kind of thing. So I've already done it. So you really can't get anything over on me because I've already done all this stuff. And like I said, that's why I'm trying to get this out to the public, is so you understand what's going on. If you're an investor, buyer, you're a seller, you're a real estate agent, mortgage broker. Real estate agents, it drives me nuts because mortgage brokers, because the designated brokers, the officers or the broker owners don't teach anything to these agents or mortgage brokers, and they're stumbling. Like Joe Stump had a thing on, he owns buyreferraonly.com. Stump, he's probably worth, he wouldn't surprise me, worth $200 or $300 million, maybe more, because he's been around the game so long. But the thing about Stump is he sold real estate a long time ago in Chicago before he ever went to LA and worked for Earl Nightingale. And he already did it. He sold tons of properties in Chicago a long time ago. I think it was in the late 70s before he went to LA in San Diego. But the thing about Stump is he had this is for real estate agents, mortgage brokers. You should be going to buyreferraonly.com and watching his videos. He had this video that came out like 5-6 months ago, and he was talking about the real estate agents now, how they don't know anything because the markets are so good in some areas. They don't have to do anything, but they don't have any skill sets. And I laugh because it's true. Sometimes I'll call real estate agents up and I'll check out houses in the area that I'm in, and just to kind of see. And what I'll do is I'll pick up the real estate books and I'll call the top agents because I already know who they are. And I'll call them up and start asking them all these questions and watching them get flustered on the phone. I just laugh. I got this, one of my Facebook pages I had this for kind of local stuff. Excuse me. I had this one real estate agent in this area. They've got their signs up and they do TV commercials, blah, blah, blah. And showed how much they made for last year, which was okay. I mean, it wasn't bad. They did like 85 million or whatever, which is, it's not too bad in sales. And I put on there, I go, did it come out to this amount of commission? I want to see if they responded back. I just threw a number out there just to see. I want to see if they responded to it. I haven't started back from them, so who knows? But what I'm saying is, they're trying to make themselves look better than they are. But I've called up and talked to one of the agents because they're a team, and I asked them some questions, and I flustered them because they couldn't answer some questions on some basic stuff, and I was just doing it just for the hell of it. And I've done that before. So, it's a different, real estate's different where I'm at because I'm more countryside. I mean, they've got a couple cities, but they're small cities. It's a lot different here than it is in the big cities. Big cities, way more high speed, a lot faster, and they do a lot more stuff. When you're out in the countryside, it's a lot different, a lot slower pace. And they record a year out here in Lake of the Ozarks, Jefferson City, Columbia area. But, it's the real estate's done differently out here. It's kind of, there's some stuff you can do here that I used to be able to do back in 95, 97, 98, up to 2008. There's some stuff you could do back. Housing prices are a lot lower, but they've gone up quite a bit in 6 years. So, and it's just the nature of the beast because you got a lot of people moving in the area, especially with all the pressures last year. So, like I said, there's all these different ways to finance. And if you have questions, go to nickforecast.com. Go ahead and subscribe to my channel. Sign up at Facebook. I'm here to answer questions for you. Down the road, as I get more subscribers in and I start really building my platforms out, then I'll start going ahead and doing more coaching stuff and some other platform stuff. Because I want to see real estate agencies and mortgage brokers and investors, or if you're a buyer and seller, so you don't get taken, but see you succeed. If you're a real estate agent or mortgage broker, I want to see you succeed. And I'm talking where you're doing $1 million plus a commission every year. Not 500,000, not 750, not 800,000, because I broke my first million before I was 30, when I was 29. So I don't want to hear about it. I did it a long time back before all the stuff they have on now. And so what it is, I want to see you succeed so you can break the $1 million commission mark, or at least get pretty damn close, because there's not that many agents doing 6 figures a year. It's kind of a misnomer. Now, in the big cities where the average price of a house is 800,000 or so or more, yeah, they're going to break it. They don't have to do as many deals. But the problem is, I just subscribe to the blue ocean theory. You create your own basically universe. So when they put all this crap out, especially the brokers, about agents taking this area or that area competitive, so what? Who gives a damn? You just go out and you do your own thing and build your own thing out. I don't care. I used to go into some areas. I used to get challenged to see if I can go in an area and get listings where these 2 agents controlled it. And I went in there and popped 3 or 4 listings in the area right into their noses. And so it can be done, and I've done it. I did this in 95. I remember I got challenged to go into this one area on the east side of Seattle. It's across a bridge. This is where there's a lot of wealth there, a lot of billionaires, multimillionaires. I went in this one area, and he had a couple agents in there, 2 agents that had most of the listings in there, a good majority. I went in there and got 4 listings in the area. These are $1 million listings right up in the area. And the agents called me up. They were all pissed off because I stole their listing. I didn't steal anything. I got on the phone and called, and you didn't. So, it's all crap. So if you're an agent, go ahead and take an area that you want. Now, like I said before, my target area wasn't the $1 million area waterfronts. I really didn't care about that because I was a mortgage guy too. So my area was essentially basically the middle area. It's essentially, let's say, 200 to 500,000. Now, when I first started out in Seattle, the average in 95, the average house for real estate, the average was only 132,000. So, that's where I started. But as time got on, it went way up into the 7-figure plus range. But I still kept it in my area between about 250 to 500, 200 to 500, because that was my target area, because I used to do a lot of mortgages too, and that was my area. And that's the area that I like to stay in. As time went on, it went up because a lot of these buyers were move-up buyers, and they went up. So as an investor, this is something for you to look about when you're buying properties, because you can look for that if you're doing home stuff. But I would tell you, you need to start looking at apartment buildings. Let me say again, apartment buildings. Before you buy a house, buy a 4-plex, okay? Unless you get a good deal on the house, it's a location-intensive area. But the thing is that if you look at some of these areas that are middle-class areas, and you look for apartment buildings, this is an area you can work it, because those are the move-up areas, especially when it goes in the upper middle-class areas. Okay, Dan Cardone talks about this stuff all the time. Location. It's true, totally true. But there are other areas. There's stuff in the charcoal gray area where you can work it. So I just want you guys to know that. So, anyways, get a hold of me at nickforecast.com, Facebook at nickforecast. Go to my YouTube channel and sign up. If you have questions, ask me. And we'll talk to you guys again. Have a great weekend. Out.